Okay, guys. I wanted to talk about today something that I believe is extraordinarily important. And that is, many of you know that I I make a lot of focus. I put a lot of focus on plays that originate from a narrow state. All right. Now we're going to take a look at Uber here on the 2-minute time frame. This is Friday's activity, which starts here. Now, you should always really focus in the morning. If you're trading in the morning off of the open, you should be focused predominantly on which stocks in your list are originating the day from what I call a narrow state, which is your 20-period moving average and your 200-period moving averages are relatively close to each other. All right? All right, so the two moving averages traders are relatively close together. They don't have to be like touching each other like this over here, although that's great. They just can't be wide apart if you want, on average, your stocks to have flow, and be able to produce enduring gains or enduring wins. All right, so we can see here that Uber produces a fat, solid bear or red elephant bar, and that elephant bar is starting from a relatively narrow state. It's not like the 200 is here and the 20s down there. Okay, so it's a relatively narrow state. Now, what we see as well is that we get the initial drop in Uber. It pulled back toward the 20-period moving average, just pulled back relatively as halfway, okay? And we move to a new low. Now this is what I call a whale. That pattern right there, boom, boom. It's 3 parts to the move. 1, 2, and 3. The third part makes a new low after the relief rally, okay? This 1, 2, 3 move, this is an opening trader's dream. That is what you're looking for every single morning, every single day in a play. You don't get it every day, but this is what you're looking for when you enter every single play off of the open. All right, do you understand? This is what we're looking for. We're looking for the whale. Okay, so whale complete. Is this on the downside? 1, 2, 3. Whale complete. That is what we're looking for. We're looking to get into a play initially off the open, experience that first drop. The stock will tend to have a relief rally. We want that a relief rally to not be big like that. We want it to be roughly halfway or so. And then boom, drop to the new low. Okay. And normally the final part of the trade ends there. Okay. If you can grab whales with a degree of consistency, you're going to be a huge profitable trader. The whale on the other way is this: up, boom, and then bam, there's your new high. 1, you want to get into your play here off of a narrow state, preferably. Initial move up, you'll tend to get a relief pullback. That pullback stays about roughly halfway or less, and boom, the next move to a new high. There's your third move, and trade complete. This is the fullest type of trade, a whale. That's what I call a whale. All right. Everything in the market is always related to animals. Bull markets are up markets, bear markets are down markets. I call this the whale trade. Now, one of the things you have to be aware of is that you can't choose what size whale you get. There are baby whales, there are medium-sized whales, there are Moby Dick-like whales, right? So you can't choose what size or how much a whale is going to produce. Even though you get a whale, it might be a small winning trade, but some whales are huge winning trades. All right. But a whale is a whale as long as it has these three parts. Now, that's not really what I want to talk to you about. All right. Today, I just wanted to put that in as the foundation. What I want to talk to you about is the way markets move from a narrow state to a wide state and then back to a narrow state. And if you can understand this concept, you can build a very powerful trading approach just off of that base knowledge. The knowledge that markets move like this. Look, boom, narrow, wide, back to narrow, repeat. But they can also move the other way from a narrow state to wide, right? Back to narrow, repeat. So you have the move from narrow to wide on the downside and the move from narrow to wide on the upside. In the case of Uber here, we're starting the day narrow. It's coming from narrow to wide. Okay? We're getting it to the downside. Now, here is really what I wanted to get into today. How do you know? What are the key signs that your narrow state has moved wide enough to begin closing the wide state back to narrow? Because that's somewhat relative. Like one can say, like, look, Oliver, we're wide here. Is that wide enough? Is that wide enough for me to expect the move back up? Or is it wide enough here for me to expect the move up? How do I know when to think that I've got wideness enough? Is it there? Or do I need more wideness? That's very key, because if you start betting here on a reversal, you're going to get slammed if it's not wide enough. The reversal comes there. So knowing when you should start thinking that, we could get a reversal back from this drop because we are wide. And I'm going to give you several characteristics. Nothing's perfect. These are guidelines, but they're very valuable guidelines. Number one, if your move is the first move from the narrow state, I don't care how wide things get. It's not it. You see, this is the first drop from the narrow state. Even if it dropped here, that's not it. You don't bet on a reversal on the first drop. Any rally is going to be a relief rally most of the time from the first drop that will drop back to the downside. So rarely does the first attempt up after a drop lead to a reversal. It can happen. Yes, it happens about 9 to 11% of the time. You get the V bottom. Boom, boom. But that is not frequent enough to put in your trading plan. My father used to say, Oliver, every dollar in the world is not yours. You have to choose what kind of dollars you want to make. All right? You don't want to make dollars stealing cars. You want to make dollars trading stocks. There are some people who make money stealing cars. That's not your money. This is not your money. You don't bet on the first bottom after a drop. You will only be profitable 9 to 11% of the time. We want things where they work 80+% of the time. Okay? So the first bottom from a narrow state is not the one you bet on if you're trying to go the other way. But if the bottom is the whale bottom, remember the whale is 1, 2, boom, that bottom can potentially be the reversal bottom. Okay? Do you follow me so far? Not the first one. You got it for me, guys? You follow me so far? Okay? So, guys, I can save you from a tremendous amount of pain with this concept. Don't bet on the first bottom that forms on a move that originates from a narrow state. All right? That's rarely the one. Here's the move from a narrow state. This one is rarely the one. Do you know how many hundreds of thousands, if not millions, of traders try to bet on the first bottoms only to get slammed? They don't know this concept. All right? Now, so the second one can be the one, but not always. So let's talk about the characteristics of the bottom that has higher odds of being the reversal bottom. It's the one with what Kel just said is dual space. If the second or third bottom or whatever, if a bottom has formed with what I call dual space, the odds are higher that it could be the reversal bottom. And let me explain dual space. This is going to be a review for some of you. We've got 3 items that make up space. We've got the 200 period moving average, we have the 20, and we have the stock. All right. Now, dual space are the spaces between each one. So the first layer of space, this is full space from 200 to stock. But the 20 separates between the 200 and the stock, right? So now you have layer 1 of space and layer 2. Okay? If your stock is here right along the 20, you only have 1 layer of space. All right? But if your stock is decently far from the 22, you have 2 layers of space. So the dual layer space goes like this: 200, right? The 20 is also separated from the 200, and the stock is separated from the 20. So you have these dual layers of space. Okay? Now here you don't have any space. The stock, the 200, and the 20 are relatively close to each other. Do you understand? Here you only have 1 layer of space. Your 20 and your stock is relatively close. So you only have 1 layer of space. But here you have 2 layers of space. Let me do that better. You have 2 layers of space. That's where your stock's low. 1, 2. When you have, so check this out, guys. When it's not the first low, when it is the second, third, or fourth low that has dual space, the odds have increased that it could be the reversal bottom. Do you understand? You got this so far? It can't be the first one. It's got to be the second, third, or fourth. Okay? So if it's second, third, or fourth, and you have dual space, a bullish bullish signal can ignite with good odds. A bullish signal can ignite the move back from wide space, okay, wide space, back to narrow. And so I want you to focus on capturing igniting moves from a narrow state down, right? But I also want you to have the skill of being able to spot bottoms that are likely to close the wide space. And this will make you a profitable trader this way and that way. All right? You won't be a one-dimensional trader. You won't be a one-directional trader. You'll be a dual-directional trader. This will double your gains. All right? Now, if we can look carefully, look at what happens. So we go from, let me close this a little bit. We go from the narrow state, you see the narrow state, to the wide state, right back to the narrow state again. And traders, that's all markets do. They simply vacillate from narrow state to wide state, back to narrow state. That's it. It's like a breathing mechanism. They inhale, lungs are close and tight. They exhale. All right. So inhale, exhale, back to inhale. That's it. The $64,000 question usually is the exhale going to be down or is the exhale going to be up? Is the exhale going to be like this? Boom. Or is the exhale going to be like this? Boom. And that we know, usually we isolate that with the first bar. The first bar is telling us that the exhale is going to be downward. Boom. All right. You see? There we go. So this concept of combining the concepts of narrow to wide, okay, whale complete, whale plus. I'm going to put whale plus here because sometimes it's not just that whale. Sometimes it's that one. So you kind of have two whales here, right? Sometimes it's the third one or even the fourth one that gets you your dual space, and that's the turn that can happen. All right. So narrow to wide, whale plus, and dual space. These three concepts will help you become a more accurate finder and picker of turning points in the market. And it happens on both sides, the downside as well as the upside. Although most traders will focus more on it after a downward move.